Welcome back. Bruce Porter joins us now for this week's Dollars and Cents segment. Thank you for coming in.
Good to be here.
Good to see you again. All right, we have a question. You ready for an answer?
I'm ready.
Are you ready to answer? All right, here is this week's question. I've been trying to find a respectable interest rate on my savings money in a CD with not much luck. I need some interest to supplement my Social Security income. Why are rates continuing to stay so low, and what alternatives are available for seniors on fixed incomes? That is a good question, because a lot of seniors historically have relied on those interest rates to help them bring in a little extra money, and for years and years and years it's been dry. What
Absolutely.
do you say?
Well, I mean, we're approaching 7 years now. Interest rates have really been low.
Right.
And seniors stuck in the old mentality. I've got my money in a CD. Historically, they had pretty respectable rates of return, even in 07, 5.5%, almost 6%. So respectable. But now, here we're faced with 0.2, 0.4, not even a half a percentage point. So let's dive into it. It's boring as it can be, but we're going to make it interesting.
Okay.
The federal funds rate is what we have to understand. Now, by definition, it's the primary tool that the Federal Open Market Committee uses to influence the economy and interest rates.
Right.
So there's your federal government that basically uses this as a tool to establish the availability of money. It's the primary supply tool that controls the supply of money and keeps interest in check, inflation in check, things like that. So when we have a higher federal funds rate, it makes it more expensive, and the federal funds rate is the bank's ability to borrow money. When the federal funds rate is high, it makes it more expensive for banks to borrow money, which lowers the inventory or the supply, which increases short-term interest rates. Now, in the same regard, a lower federal funds rate will be less expensive for a bank to borrow money, increases the supply, which lowers the interest rate.
Okay.
All right. So now, in a nutshell, a lower federal funds rate is stimulating the economy, and it's making it to where people can afford to borrow money and make purchases.
Right, more buying power. Okay.
A higher federal funds rate, a higher rate, people aren't going to buy, they're not going to spend. So they're using it to stimulate the economy until they see fit to raise rates up. So now banks, they have to protect their margins.
Sure.
So a bank can't pay you a respectable rate on a bank CD when they can get money from the government for next to nothing.
Right. So where else do you put your money? How do you combat that?
Well, so when you look at it, you need to think seniors are forced to step outside of the norm, and they have to think outside of the box. You know, a senior with $100,000, 0.2%, that's $200 a year. That's ridiculous. I can see rates outside of the box. There are products, 4 to 7% rate of return. Still make it available to your heirs, but leverage 4 to 7% out of your money in your lifetime. And when you consider that with security and safety compared to FDIC-insured bank CDs, you really have to kind of think outside of the box in order to try to look for alternatives. Now, those alternatives are available, and I understand safety and security is a primary objective, but you just got to step outside of your comfort zone, and you got to talk to a professional.
I start to say, where do you got to find those? You need to talk to someone who knows these products, right?
You just talk to a professional. I'll be glad to sit down and visit. I don't charge a consultation fee. I sit down and we just visit, and I try to establish what are your primary objectives. Most of the seniors I talk to, they don't want to spend their principal. They want to live on their interest and use it to supplement their Social Security. So I look for products and companies that will offer that respectable rate of return.
Right, and that $200 a year is not going to help out a whole